bit of data that we were able to access, and this is to do with the number of the capex number. This kind of unprecedented capex number, I don't know how many in the audience will know, and I was checking, it's larger than the GDP of Kenya and double that of Myanmar. The question everyone is asking, in the last 3 years, the Modi government has gone full hog ahead on capex. What is the philosophy behind it?
Good afternoon, Siddharth, and really good to be on your show, and thank you for your kind words. Capital expenditure is really sort of the secret sauce for growth. Because what happens is that when you're investing in infrastructure like in railways, in airports, in highways, in other aspects like metro lines, all of these not only result in growth right away, because what happens is you obviously employ people when you're building a railway line, you buy cement, you buy steel, you get a construction company to do that. So you definitely stimulate growth even as you're building a railway line or you're building a national highway. But what happens is then you're putting an asset in the ground that's going to make you more productive and more efficient for the next 30, 40, 50 years. And that's where the huge multiplier effect of capital expenditure comes in, and people have estimated that the multiplier effect of infrastructure totally is 2.5x, which means a rupee spent on a road will give you a return of 2.5 times the money that you've put in, and that naturally results in growth in that year in which you're constructing, but it also helps you create growth in future years and growth that ripples through the economy. So it really is the secret sauce. It really drives growth. Certain aspects of infrastructure are even better. So for example, having been associated with the aviation system, people have found that if you invest in airports, airports have an economic multiplier of 6x. So you build an airport, you drive growth 6 times as a result of that, because not only then do you drive, obviously, usage in that particular year, you create more tourism, you create better logistics, you improve efficiency, and so on. So by really making this very bold and very dramatic bet on capital expenditure, on infrastructure, we have been able to sustain our growth, and right now, the growth that we have in India is absolutely the pride of our country and is being hailed everywhere in the world.
That's a very good point, and if we were to add on what the states are going to spend, the loan that are provided to the states, State Bank of India, Soumyakanti Ghosh was earlier on the panel, Mr. Sinha, and he told us that if you added up everything, including PSU spending, you actually have 19 lakh crore plus. Now that is a massive number, and roadways alone has gone up. The transportation segment, including railways, the allocation has gone up 56%. The question to you, sir, is while the double R, roads and railways, has gone up by 56%, rural development is 4%. Agriculture is just 0.7%. Health and urban development are just marginal increases. The question a lot of people are asking, you are putting money in roads and railways, why are you not putting money in health or agriculture for our 400 million farming dependent people?
Yes, Siddharth, that actually is a very poor analysis, and let me correct the numbers that you have. Sure. First of all, when it comes to the rural economy, rural infrastructure is being built up very, very quickly. Pradhan Mantri Gram Sadak Yojana, which I can tell you about from my own constituency in Hazaribagh, is being rapidly accelerated, and we are spending a lot of money on Pradhan Mantri Gram Sadak Yojana. A lot of the highways are going through the rural sector. There's tremendous money being spent on Pradhan Mantri Awas Yojana, that's gone up 33% to 80,000 crores. Jal Jeevan Mission has also got a 30% increase. That also is largely happening in rural areas as well, because that's where we don't have clean drinking water. That's going into rural areas as well. So we are doing a lot for the agricultural economy. Rural infrastructure is being built up very strongly. And remember that there was an announcement of 1 lakh crores for agriculture infrastructure fund a couple of budgets ago. You may remember that. That money is being spent right now, and that is absolutely being used to make cold storage facilities in rural areas. It's being used to improve irrigation schemes. All of these are getting the benefit of tremendous infrastructure spending as well. And when it comes to health, and when it comes to to education. People are saying that, we are not putting enough money there. That also is not correct, because the reality is that there it is largely the states which collectively account for more money spent than the central government. The states are spending massively on education and health, which constitutionally is their subject as well. And in addition to that, we have other sources through the 15th Finance Commission for urban local bodies, where again they're spending there for health facilities and so on. And then finally, for a place like Jharkhand, where we have lots of mining, we get royalties from mining. I can tell you in Hazaribagh and in Ramgarh, my own two districts, we are getting 300 crores a year. 300 crores a year from mining royalties, and these are being used largely for upgrading our Anganwadi Kendras, for upgrading our schools, and really improving our health facilities. So if you look at the sum total of government spending through all the different sources, you'll find that not only are we spending massively on infrastructure, which is roads and railways, as you mentioned, but also on health facilities, on educational facilities, and so on. So across the board in the economy, our infrastructure, our facilities, our basic services are being strengthened and improved dramatically.
I'm glad you gave us that perspective by adding on so many other expenditures that are being. There is very clearly 100% acknowledgement that there is no short-term populism, and given that is pre-election year, I'm guessing it must have been a tough call. The point I'm asking you is, what are your own hopes about private sector investment rising on the back of this massive capex push? A lot of this money is going to be executed in the hands of private contractors. What's your own sense, Mr. Sinha?
Siddharth, before I come to the question of private sector capex, let me explain to you this question of election spending. The Honorable Prime Minister has to be commended for his visionary and wise thinking in these matters. Remember, he's been the Chief Minister of Gujarat and won election after election there. And it is remarkable. I'm just coming from Surat. I was in Surat yesterday. It's remarkable the development that has happened in Gujarat and the popularity, the long-term popularity that has ensued as a result of these visionary longer-term policies. And for the Bharatiya Janata Party under Honorable Prime Minister's leadership to win a 7th successive election in Gujarat, a 7th successive election, and to have been in power for 27 years, and this election was won with the BJP getting 156 seats, which is 85%. 85% of all of the seats is remarkable, and it demonstrates that it is not election gimmicks. जो रेवड़ी वाली जो बात माननीय प्रधानमंत्री जी ने की, वो रेवड़ी का तो आप छोड़ ही दीजिए मामला. अगर आप दूरदर्शी विजनरी अगर आपकी सोच हो, लॉन्ग टर्म अगर आप सोचें, तो जो आपको सस्ती लोकप्रियता नहीं, नॉट चीप पॉपुलैरिटी, but genuine long-term enduring popularity you will get if you follow good policies. I think that's what the Honorable Prime Minister has shown us in Gujarat, and that is precisely what we are following in the national level as well. And that is why I think we'll keep winning election after election, because it's not election gimmicks, but long-term visionary pragmatic policies that deliver results on the ground, that result in true long-term popularity. And that is effectively what we've done. I've said this in Parliament on many occasions as well, Siddharth. Now, let's come to private sector capex. Now, if you studied the economic survey, Siddharth, you'll have seen that there is a clear upswing in private sector capex. Private sector capex is beginning to improve. And that, of course, is very natural, because we are coming out of COVID, where capacity utilization had come down, demand had come down, and now capacity utilization in our factories and in our private sector facilities is now inching up to 70-75%. And this is the point at which people start to invest. By keeping inflation under control, keeping real rates under control, we made it very attractive for the private sector to invest in infrastructure and in their productive facilities. And that's why, with growth being sustained, with the macroeconomic stability that we have, and India continued to being seen as a shining star globally, we are likely to see, along with the very significant capital expenditure that the government is incurring, we are likely to see very strong private sector capex as well.
Mr. Sinha, since we are talking about growth, what's your own sense? Earlier today, a question was asked, when will India sort of aspire for double-digit growth? We don't hear a mention of that, and I'm not pinning you down on that, but your own reading of the growth dynamics at least playing out till 2025.
My own sense is that we are in a neutral global environment or in a negative global environment on a domestic basis, completely capable of growing 6 to 7% a year and have been growing at that rate. We are estimating 6.5% next year, when next year the view is that the global economy will hit a recession or be very close to a recession. So with the global economy in a recessionary type of environment, for us to be able to do 6.5% growth is absolutely remarkable. And that is why India is seen as a shining star globally, because of our strong domestic growth. And of course, the capex and the consumption story that is unfolding in India domestically is sustaining that growth. Now, if the global economy does well and our export engine fires on that, and we have bullish sentiment in the capital markets and stronger investments as a result of that, it's highly likely that we will be able to grow beyond 6.5% and get to that 8 to 9% growth that we would all like to see for India. But that does depend on global conditions as well. I think there is an impact of those conditions on our growth. With that in neutral or negative territory, which is what next year is expected to be, we can still grow at 6.5%. If that turns around, we could easily grow at 8 or 9% as well.
As I wind down this conversation, one broader question to you, because you understand the masses, you are an elected politician. Is it the government's intent to withdraw all exemptions that the middle class enjoys? That is one of the responses we have heard for the new tax regime.
We want to make sure that we have a fair and transparent tax regime that is something that will result in better compliance and more people coming into the tax net. So we want better compliance, we want fairness, we want transparency. And if you look at the new tax regime is absolutely taking you in that direction. And in fact, if your exemptions are modest, you also are able to save quite a bit of money in the new tax regime. And that's what makes it fair, transparent, and easy to comply with.
Is it fair, given the kind of lower headline rate that corporate India enjoys versus the middle class?
You have to look at it from the point of view of what the global tax environment is. The global tax environment for corporations that are quite mobile in terms of their businesses is in that 25% range. So 25% is about where corporate taxes are around the world, and we are very much consistent with that as well. When you look at individual tax rates around the world, whether you look at China, you look at the US, you look at Germany, you look at the UK, our tax rates are very consistent with individual income tax rates in those countries. So from a global perspective, tax rates are very fair, very much aligned with global benchmarks.
All right, Mr. Sinha, thank you very much for that short but effective explanation of certain questions that have been lingering in the air. Thank you very much for your time with us today.
Thank you, Siddharth.
Thank you.
Thank you, Mr. Sinha. Thank you, Siddharth. And Siddharth, do stay on with us as well. To continue that conversation, we would like to invite to join us Nitin Gupta, Chairman, Central Board of Direct Taxes, to really further this discussion on the long and short of taxation in conversation with Siddharth Zarabi.